Today we will talk about a thing that I try not to get too involved in, but I think it is important for where we are at in this current bull run. And that is a correction and how headlines about our topic here, which I won't actually speak on or else it might impact me, can cause a lot of emotion and fear, particularly for risk on assets like crypto. Just over the past month, gold has gone from about 2,150 per ounce all the way up to a high of just under 2,400 per ounce. Silver has gone from a low of about $24.40 up to just under $30 per ounce. And not only does geopolitical conflict impact that, but we have also had troubles in banking here in the US and internationally, especially in Japan. On April 12th, 2024, we had JPM, Wells Fargo, and Citibank going lower because of interest rates. And the talk around Bitcoin in particular right now is pretty dark, especially with the price action over the last week or two, and even over about the past 1 month now. And that is because even over the last 1 month, when we have surpassed all-time highs, we are down 12% right now. But we are up just over 100% in the last 12 months. And with the traditional halving narrative about to hit in 5 days, and with even more ETFs about to come online, particularly in Hong Kong, it just doesn't really make sense in my mind that we won't continue to go up. There is not any other part of the economy right now that can keep up with the returns of crypto, even gold and silver at the moment. I am expecting each of those to increase again on Monday, April 15th, after all of the events that are now happening. And to concentrate on the fundamentals that are covered up by the current events, we haven't had a good economy in quite some time. Here we have overtime hours peaking in about 2018, and they are down about 25% since that peak, as commercial and industrial loans have gone up and up and up. Our unemployment rate is beginning to tick up again in this trend as our overtime hours continue to go down, which means that our economy isn't actually producing much of tangible value at this point in time, and it hasn't been for quite a while. Here is an interesting tweet that I really wanted to highlight. If you look at R invaded U on a chart, tell me what you see. It marked a bottom from which we rallied 40% and which was not broken for 4 months. Stop focusing on the narratives, which I do agree with in large part. However, I believe that the Bitcoin ETF and Ethereum ETF expectations and even XRP ETF talk are all extremely important and are not just talk. So on that note, I went and found the day that R invaded U, which was February 24th of 2022. And if we look here on a chart, that is at this point where we were at about 36,922. And it went all of the way back up to about 44,400 over the span of under 1 week. And it came back down only to go back up to just under 48K. And why is that important? Well, it's important because it shows that trends are not based on emotions, no matter what we think. Yes, they can have short term impacts. However, if we look at the price action over the last 1 month or so, we have been in this top end of the uptrend where it has been trying to end up in a distribution pattern. And as we head back down, it will likely chop around about halfway in between 50K and 73K. It could try to test the local low of about 50K. But with everything else happening right now in support of Bitcoin and crypto overall, I just don't really see it heading under that. Even if we did go to K, it would be a correction of about 32%, which is historically kind of expected at this point in a bull run. So if that happens, then in my interpretation of everything and for where I highly think that we are actually headed with regulatory clarity, ISO 222, and all of these international real-time payments coming online, I just don't think that we have peaked, and I don't understand why that is actually being talked about. If Bitcoin were to take a additional 20% cut from here, all that says for me is that the coins and tokens that I have interested in will be extremely cheap.